Welcome guys, Craft here. I'll be your host. In this video, I'm going to be putting it all together, right? The basics of the charts, basically what we learned for the month of June. Alright, now it's best to note or to say that I won't be using the green and red diagram to represent my candles again, so as to not confuse you guys, because I basically have black and blue on my charts. Now, the blue will be represented as green on your own chart and the black will be represented as red on your chart. But just know it is not about the color, it is about what they represent. So a blue candle on my chart is a bullish candle, the black candle is the bearish candle. For your own chart it will be red candle. That is if you have not customized it to, it's going to be a red candle and this is going to be a green candle, right? Now, what is a bullish candle? A bullish candle is a candle that closes above where it opened. Now let's say a candle represents, each candle represents a time frame, right? So within a specific time, let's say a day, now during a day, it could be a week, it could be a year, it could be a month, it could be 4 hours, 2 hours, 1 hour, 30 minutes, whichever one you want to call it, right? Each candle represents a specific time frame. Now let's say daily, for example, if a candle opens at, let's say this is at level of 100 USD and then it closed here at level of 500 USD, right? That is a bullish candle because it closed above where it opened at the end of the day. And for a bearish candle, we opened at 500 level and then we closed at 100 level, so that is a bearish candle because it's closing below where it opened, right? So it sold. That means the sellers pushed price down, right? And then the highs and the lows. The high is the highest point it's got to during that day, and the low is the lowest point it's got to during the day. For a bearish candle, to high is the highest point it's got to, and then low is the lowest point it's got to. Now the diagram I have here, this one now, this is how an higher time frame candle is represented on the lower time frame, right? So if you see a big candle, a major candle like this, let's say this is a monthly candle, right? If you go to the weekly, you're going to be seeing 4 candles representing this particular candle, and if you go to the daily, you're going to be seeing 30 candles representing this particular candle, right? If you go to the 1 hour, you'll be seeing multiple candles representing just that one candle. And you see this move from up to down, they are called swings, right? Price is swinging from highs to low, highs to low. So this is an high, this is a low, this is an higher high, an higher low, because this low is higher than this low, so an higher low, higher high, higher low, higher high, higher low. For this one, we have the low, the high, the lower low, because this low is lower than this low, lower low, and this high, lower high, lower low, lower high, lower low, lower high, lower low, and so on and so forth, like that, right? So basically 2 types of candle, bullish candle and bearish candle, right? We are still going to the charts to explain these terms properly, right? I just want to put us back on track again, and then we also talked about the types of structures we have, right? So structures now are like the representation of this candle. So we have a bullish structure, a bearish structure, and don't forget we also have the ranging structure, the one that is not breaking any point in price. This one, that is something you see moving like this. This is a ranging market, and we said we do not want to really bother about this one because it's mostly too advanced. If I want to explain how I use this to trade, it is too advanced for a newbie currently. So the ones that are actually important is the bullish and bearish structure, right? The bullish structure is the one breaking structures to the upside. So every swing point that you see, if price breaks through a previous swing point, this is a swing point, this is a swing point. All the points that are showing this blue that you are seeing in this circle, they are swing points, right? So if price breaks a swing point to the upside, we are bullish, and if it is breaking it to the downside, we are bearish, right? And every time it breaks a swing point, it is called a break of structure. So if you are breaking structures to the downside, we are bearish. If you are breaking it to the upside, we are bullish. Now let's go to the chart and explain this thing properly. Let's go to the chart and explain it properly. So I'll be using the last 6 months of this year. I'll be using the candle of the last 6 months of this year, which is this candle right here. You can see it was open at January 2026, and it's closed today. I mean, that was yesterday. It's closed yesterday. So let's mark it out. Let's mark it out. Now let's go to the monthly time frame. It should be 6 candles that we're just going to be marking. So 1, 2, 3, 4, 5, 6. So this is our candle right here. Now you can see that from the 6-month time frame, now we're having 6 candles represented on the monthly time frame. We have 6 candles representing it from the monthly time frame, right? Just this one candle we marked here. Just this bearish candle that we marked here now. Now let's see how the structure looks like on this candle. Now you can see this is the high as we talked about, and then this is the low. It is still going to be consistent. We are just going to be looking at the structure inside it. Now on the weekly time frame, these are the weeks, right? Each weeks, we are not going to count this one because this is the candle that just opened. But anyways, what are we having now? That's one candle that we drew on the, you can see that the one candle that we drew on that 6 months time frame is now breaking into this, where we have this high and then this breakout structure back to the downside, and this high, then this low too. Right, that's giving us what? It's starting to form a structure for us. Now let's go to the daily time frame to see what we have. On the daily time frame, it is even more broken down, where we have something like this. We first have this one, then we break it to the upside. Let me turn this off. Then we have this low, and this high, then this low, then this higher high, then this lower high and lower low, then this lower high, and then this lower low, and then we broke the structure again. Right, so basically it is showing the price movements. It is explaining it in a more detailed way, right? So if you are going to see this structure now, say for the whole 6 months that we mark, or for that period of time that we marked, what was price movements? At the end of the day, we are still bearish, because look at it, we opened at this point. Let's say this is just what I marked now. We opened at this point and then we closed at this point. That means the seller were in control of the market. This is a bearish market structure, right? And you can see breakout structures to the downside. We are basically breaking structures to the downside. Although at some point I said it, that even if we are bearish, at some point you see price moving up too. So it's not just all about, say we are bullish now, price should not just be moving like this, right? It's not just gonna be moving like this, right? There has to be a retracement and impulsive, right? So every time you see in a bullish scenario, if you see price go up, price going up, this is an impulsive move. And if you see price coming down, this is called a correctional move, right? This correctional move is simple. It is basically there for the buyers to have a more cheaper price to enter. Let's say for a stock now, if a stock is opened, right, and then it is listed for like $10, we started at $10, and then people started pumping in money, and then the stock soared up high to like $50. Now new investors want to come inside the market, they need a cheaper price to enter at, right? So what do? They push price back down to somewhere around here before it continues going up. That is why I always say it, that if you have an investment with a trustworthy company, I mean a trustworthy one, emphasis on trustworthy one actually, and you see it's coming low like this, this is not a reason to be scared of, because it is not just about people who are buying, right? There are people who've already bought, there are people who are still planning to buy. So an asset will always stand down after a push to the upside. It will always stand down before it continues soaring up again, right? So as long as we are breaking these highs, right, we are respecting these lows, we are still bullish. Why? Because when they enter now, when a new buyer enter or a new investor enters into the market and buys, right, basically this is where their money is. This is where they are pumping in their money. This is where they are pumping in their money. So at this point they are still in profit, and then this is their break-even level. What do I mean by break-even? If price starts tanking down again, at this point they are still in profit because they entered here. At this point they are still in profit. At this point still in profit. At this point now they are at break-even. Anything below here is now minus. They are now in loss, possibly, right? So as long as we are still respecting these lows, that means we are still bullish. So we are most likely to do what? We are most likely to keep going higher. But when you see price now do something like this and then it breaks this low, right, that means the buyers are now in what? They are now in loss, and then that means the sellers are now in control of the market. This is called a market structure shift. This is called a market structure shift. Market structure shift means the structure of the market has been shifted. Basically that is what it means, right? So we are in a bullish structure, right? Now the sellers have been able to take out the break-even price of the buyers. They've taken it out, which is the last low. This is now what? A market structure shift or change of character. The character of the price movement has changed from a bullish one to a bearish one. So it's basically as simple as that. So this is a scenario where something like that happened, right? We are tanking to the downside, like for the example now, from this point now we went up, right, we broke the structure. Now the people that entered here, even though price came to this point, right, does this mean we are bearish yet? No, because this is where they enter, this is where their money is still, this is where the buyer's money is. We had a push to the upside. Now the people that entered here now, because they think price is going to break this one, right, and then price does something like this, this is an internal market structure shift. Why do I call this an internal market structure shift? This is external, this is internal. Now this is internal because it is not on the long-term movement. What do I mean by this? This move now push to the upside, that means buyers are here, right? So until this one is taken out, everything that happens is still internal. Everything that happens is still internal because the big buyers are still active in the market, right? These are just people that just joined again. The previous buyers are still in the market. These are people that just joined the trend, right, and they've been taken out. So this is sign that price might become what? It might become bearish, but it is not proof that it has become bearish. It is sign that it might become bearish, not proof or evidence that it has become bearish. Now when we now see something like this, and the price breaks to the downside, now this is evidence that price is bearish. Now get the two difference. This is sign that price might get bearish. This is evidence that price is already bearish. Now that we are now bearish, what did price do again? Price gave us this new high, right, then this low. Don't forget people entered at this point also, right, because this looked like a little bit of retracement, but then this is not the type of, I'm going to talk about this type of retracements in our liquidity classes. I'm going to be talking about it. These are called inducements. I'll be talking about them more in liquidity classes. So we had this push, right? Don't forget people try to enter here thinking it's going to keep selling, right, and price took them out, coming back to this highs right here, coming back to this high right here, and then it kept on tanking down again. It kept on tanking down again, breaking the structure to the downside. So this is an evidence that price is still bearish, right? This is an evidence that price is still bearish. So for you to confirm a market structure shift, right, the internal market structure shift is not a proof, as I said, so it is not really valid. You want to be using informations that are valid, facts, something that has happened already. That is what you want to be using to judge your decisions in the markets, right? So a market structure shift is only valid when you break an external structure. Now say we are moving like this low, break this high, right? And then we created another low that sponsored a move that broke this high, and then we did something like this, and then we break this high. Now is this low a valid low? That is the question we should be asking now. This low right here, is it a valid one? No, it is not valid. Why? Because it did not sponsor a break of structure, right? So a valid low, also known as a strong low, or a valid high, also known as a strong high, are highs and lows that broke structure. Let me use lows for example so I won't confuse you guys. This low is only valid when this move, this swing, breaks structure to the upside, and this market structure shift is only valid when it breaks a strong low or a valid low. Get that again? Let me put that again. Let me put it again so you guys won't be confused. We have swings like this, right? Now this swing point, this point here is sponsored a move to the upside that looks like this, right? So this is called a strong low because it was able to take out a previous high in the market. So this is called a strong low. Now say we have a retracement, a pullback like this, and then price moves up again. This is also a strong low. Then we have something like this, then price fails to take this high. What does this mean? Let me explain the logic behind it. Alright, this means that the sellers here, because every time price retraces, that means sellers were given chance to participate in the market too. Don't forget, it has to be balanced. Buyers and sellers has to be active in the market for price to move, right? So if the buyers are losing, that means the sellers are winning. If the sellers are losing, that means the buyers are winning, right? So if price move from this point to this point, that means the buyers pushed it up, right? And if it comes from this point to this point, that means the sellers pushed it down. Now if price comes here, don't forget every swing point, that is where their money is, right? That means the sellers money is here also. So if price comes from this point to this point, it means it has taken out the sellers money, meaning the buyers are still strong in the market. Are you getting me now? Meaning the buyers are still strong in the market, giving us this new high, and then price came down again, sellers pushed it down, and then the buyers pushed it up, taking out the sellers money here again. Now if price now fails to break this high, and then we did something like this, now although this is not a strong low, right, but what just happened is that there is buyers money here. The buyers money was not enough to take out the sellers money, alright. So the sellers money that was here took out the buyers money. Now buyers has been tackled in the market first time, but where are the strong buyers? Don't forget, these are not strong buyers. Where are the strong buyers? The strong buyers are still around here. They are still around somewhere around here. They are still somewhere around here. So what is going to happen now? If price now takes this low out, then we can now confirm that the sellers have now been able to push out these strong buyers. That means the sellers are now stronger than the buyers. But this one, because this is not a strong buy, this is a bully. They are basically a bully. They are bullying people that are below them, lesser than them, right? So a market structure shift only happens when price breaks through a valid low or a valid high. Now for a bearish scenario, now it's gonna look something like this. Alright, so we have the sellers here pushing it to the downside, and then the buyers pushing it up a little bit, and then the sellers taking out the buyers money here, pushing it to the downside again, then the seller and the buyers up again, sellers pushed it again, then we have something like this, fail to break this low, and then we break this high first. This is internal, internal is not so valid. It is only signs that it might likely happen. It's not proof that it has already happened. So you wait for price to give you proof that it has happened, evidence that it has happened, before you make a decision in the market. You do not guess, you use proof or evidence of events to determine your actions in the market, right? So let's look at the charts for more example on this. So we've talked about how price came to respect this one right here, and then this is not a valid market, this one is not a valid market structure shift until we shifted at this point right here. Let's use another chart, let's use another level, right? So you can see we had this to the upside, and then we had this breakout structure to the upside, then this low, then this high, this low, we had this high, this low, this high right here, this low. Now did this low break structure to the upside? No. What did price do? Price took it out, right? Price took out this low out. It did not break structure to the upside though. Then we had this breakout structure again. Now where are the strong buyers located at? They are located somewhere around here. They are located somewhere around here. And what's the price do? After breaking this low, making people think price is about to start selling, we started buying again. We started buying to the upside again, giving us this high, this low, this high, this low. Now look at it, happened here again. Did this low break this high? No. So what did price do? Price came up here, failed to break, right? And then it came down here, right? Coming to a strong buyer zone around here, coming to a strong buyer zone around here, right? And then it's continued going up again till we broke this high right here. So basically you need to be able to read breakout structure and market structure shifts. Now we did not get a breakout structure until we broke this one right here. So everything that you see inside here, they are called internal breakout structure, internal and external breakout structure. So yeah, basically that's just what I want to point out to you guys in this video, right? And then also yeah, the range high and the range low, we are going to be talking about how this represents as liquidity on the charts, right? So now if price breaks structure to the upside, let's say, let me give you this scenario. We started from here, now we break structure to the upside and then we broke it to the downside. Then from here now we started breaking structures to the upside. We started breaking structures to the upside. Now what does this mean? This is a very good thing you should be able to note. This is called a range low and a range high. Now why is this a range low and this is a range high? If you want to know the beginning of a trend is a market structure movement, right? So if you are breaking structure to the upside, that means we are in an uptrend. Bullish market structure is an uptrend, bearish market structure is a downtrend, right? So if you are breaking structure to the upside, how do you want to know where the trend started? The trend started at a point of commitment. That is where the buyers came inside. Now if you look at this, we broke structure to the downside, meaning the sellers were in control here, right? Now after this we broke it to the downside, what happened next? Buyers came in and started breaking it to the upside. You see, so a range high is where the market structure, a range low is where the market structure shift happened or started from below. So you see we had a breakout structure to the downside and a breakout structure to the upside. So that first breakout structure to the upside, which is opposing the previous breakout structure, is the market structure shift. So this one will be referred to as a market structure shift, and then this one will be referred to as a breakout structure. Why? Because this one is opposing the last structure that was broken, or the direction the structure was broken to, it's opposing it, right? This is a break of structure, this is a break of structure. Now if we see from this point now, say we have something like this, what's this now, we have something like this again, and then we break it to the upside again. This is a break of structure, right? Then we add something like this. Now this is a market structure shift. Now this is a market structure shift. Why? Because we started breaking it to the downside again. Now where will be our range high and range low? This is the range high. That means during that trend period, right, during that period, don't forget, this is the movement through time. Price is moving through time. This is time right here, right? So during this point of time, point in time to this point in time, right, where is the highest point and the lowest point equals to? This is it right here, and this is the high, this is the low. That's the high and that's the low. Now so until we take out this particular low, say we take out this particular low, we cannot even confirm that the whole trend has shifted. What do I mean? Yes, we've gotten a market structure shift here. Market structure has shifted, not the trend. It doesn't mean that the trend is now what? It doesn't mean that the trend is now a bullish trend or a bearish trend, sorry. Until we now take out this range low, that is when we now confirm that the trend is no longer a bullish trend. It is now a bearish trend. Same thing goes for a bearish scenario too. Say we were once bearish. Let me delete these points. Say we were once, we broke structure to the upside, right? So we started going to the downside. We started going to the downside like this. Break to the downside, and then break it to the downside, and then we now break it to the upside here. Then something like this. Something like this. So basically, what is this one saying? Let me know this. Sorry. Basically, what is this saying? We broke structure to the upside, right? So this to the downside, market structure shifts. This is a market structure shift, and then the next one is a break of structure. This is a break of structure. This is another break of structure. This is another break of structure. Now what happened here? We got the market structure shift because it is opposing the last direction which we broke structure to. It is opposing it, right? So this is what the commitment zone. This is a commitment zone. This is where the buyer decided to enter. That is a commitment zone, and then this is the range high. So although we have a market structure shift, that means we are now bullish, but we have not changed our trend. This is a trend. We are only changing trend when we break above this level and accept there. That is when we are calling it a shift in trend, and then you will now see something like this where price will now keep going like this. So for this particular move, where is the range low? This is now going to be the range low, and this is going to be the current range high. For this one, where is the range high? Because this is where we started selling. This is the range high, and then this is where we stopped selling. This is the range low. Do you understand it now? So I think to an extent now, you guys can now start opening your charts and start practicing. This month of July, we're going to be talking about liquidity, basically liquidity, concept of liquidity, range high liquidity, range low liquidity, POIs, order block, fair value gaps, and all of that. So you need to understand these basics before you move on to the next module, which is liquidity. If you do not understand range high and range low, you won't understand the liquidity sitting behind range lows and range high. All right. So with that said, I've great day ahead of you guys, and I'm wishing you a profitable month in the month of July. Yeah, that will be all for this session.